Hey everybody, this is Lance from thetatraders.com here. This video I'm going to give you guys a freebie. We're going to actually look at some of the credit spread trades that we still have open, and you can still take these trades. A lot of them were pretty much the same premium we started out the trade at. Market went up, went down a little bit, but the premiums are within a few dollars of a lot of what we took in, so feel free to use any of these trades as you want, okay? Let's go look at some of the trades that we offered and where the stocks are. So we're going to look at some of the 9/15 expiration dates here. First we have Microsoft. Strike price was $300 that we sold, $295 that we bought. Current price at close was $326.05. So a little bit lower than where we entered. However, we were in the trade for about 7 days. So the premium is a little bit higher than the $33 that we got. Let's look at Microsoft real quick and see if it'll make sense. So right now, $326.05. I'm going to go out to the 9/15 expiration. I'll sell $300. Click the bid. Sell $300 by the $295. Right now it's taking in about 0.6 or so you get maybe $60 out of $500. Good overall return. And let's look at the actual position for it. This is the daily chart here. We're looking at down to 300. Right now the EMA is slightly bullish, that line in purple, but possibly going to be bearish. The RSI is at the 40s. Looking at any previous bounces off support, we do have a line around the 320. So I think it's still a safe trade. Don't have any reason why it wouldn't still work out because we're going pretty far out of the money on these trades. So the next one, Oracle 116 stock price. We sold the 100, bought the 95 put. Current price is pretty much the same, around 115. Took in $35 in premium. So let's look at the 195 put. We'll sell that 100, click on the bid, buy the 95 at the ask. And it's taking in about $34 or $35 or so. So pretty much identical premium here. Went down a little bit today, but you look at the chart, orange line is the short-term ENA, still bullish, but it's starting to head towards neutral. The purple also looking pretty similar. RSI is still above 40, heading slightly downward, but not quite in oversold territory yet. And if you look at the chart, it did gap up to around the 110 level about June 15th or so. And it stabilized around 105 right before it. So that's why I went at the 100 strike. So you can look at the September 15th expiration, sell the 100, buy the 95 put. We get a few more. Amazon was really strong earnings. At the time it was 141.6. We sold the 125 put, bought the 120, and took in $34 in premium. Right now it's down just about 2 points. So sell the 125, buy the 120. See what the premiums are. Looking at around $40 in premium. Still adequate. Could make 8% on your money in 38 days, which is definitely good. The chart did gap up to that 143 level. You can see it was at around 127 right before. RSI short-term purple, looking pretty much flat. Longer term is bullish. It was in the oversold area, nearly touched the 80 mark, but then went down a little bit towards around 65. And you see a lot of consolidation in June here, where it was around the 125 level. So again, I think it's a safe strike and probably would work out. So get W, Wayfair. Stock at the time was $83.57. Right now it's 81.76, so down a little bit. Did take a lot of premium, took in $50 in premium here. And we sold the 65 put, bought the 60 put. So the W. Sell that 65, buy the 60. Looking at 58, $60 or so. So you could get a few more dollars than we got. Another gap up on pretty strong earnings. A lot of volume on 804. And you can see some consolidation at that 70 line. Short term, pretty neutral EMA. Long term is bullish in the EMA. It just did drop below the overbought area. So we'll have to see if the RSI will drop from there. And last one that's recent is Boeing. Just did this one today, actually. Stock was at 239.4. Currently just a point lower. We sold the 210 put, bought the 205 put. Took in $33. Again, all these are in the 9/15 expiration. I like to do them during the OPEX week because usually more volume and open interest there. We'll sell the 210 by the 205. Forget the name of the stock. Ah, Boeing. Sorry. Okay. Sell the 210 by the 205, delta 0.09. Looking at least $30 in premium. Let's double check if these were right. Yep. Yeah, it should be able to get at least $30 in premium for it. RSI is a bit bullish because of that gap up, and it's been still trending upward. It consolidated pretty much neutral today. If you see this gap right there, right at the 210 area, still see a lot of stabilization there, so we're selling a little bit below it. And again, long-term, short-term EMA, all looking bullish. All right, so those are some trade ideas. Feel free to take any of those if you'd like. You only need $500 for one contract on any of these, so pretty friendly for small accounts, and could get good returns, mostly 6-8%. We'll typically close these. I do give set alert prices at betatraders.com. I'm not going to have time to show all the alert prices, but they're designed at technical levels and just a little bit above the sold strike, where it usually ends up being about a 3x premium for the stop loss. So if you took in $35, it'd be about $105 before you stop out. You don't want to lose the full $500 per contract because that could significantly hurt. So again, Lance from betatraders.com. Hopefully you found these freebie trade ideas very valuable, and have good trading.